G'day folks, welcome back to another update for high grade copper and US crude oil, and they're both declining since our last update. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook for both, for US crude, oil prices have fallen to a 2-month lows amid weak economic data and potential resolution of the Russia-Ukraine conflict, which could lift sanctions on Moscow. The EIA forecasts Brent crude prices to average $74 per barrel in 2025, down from $81 in 2024 due to increased global production and slower demand growth. Additionally, President Trump's 10% tariff on Canadian energy imports adds uncertainty to the market. For high-grade copper, President Trump's proposed tariffs on copper imports aim to boost domestic production, leading to a 4% surge in Freeport-McMoRan's stock. Analysts predict a 25% copper-specific tariff by Q4 2025, potentially increasing COMEX premiums over LME prices. Despite these measures, global demand is expected to grow 3.7% in 2025, though risks remain due to trade tensions. So first we start with the long-term trends. We've got the monthly, the weekly and the daily. And we've got these moving averages on both the price and the CCI. To learn how to draw those on your own charts, there's a description and in the video in the description below. But you can see there on the monthly, the price is broken below that very narrow moving average range, and likewise it's below the moving average of the CCI. Now that indicates a bearish momentum after it's been consolidating for some time. On the weekly, if we zoom into the weekly, you can see there likewise it's a fresh breakout to the downside, so bearish momentum at the moment on both the price and the CCI. So if you're trading on any of these time frames, the idea is if you're trading on the daily, you'll go in the direction of the weekly, so you should only take short trades. And at the moment on the daily, it did hit this minor resistance up here at 79.60, and it's been declining ever since. We had a couple of breaks to the upside, little false breaks if you like, but continuing to the downside according to the moving averages as well. So bearish as well on the moving averages. So again, if you're trading on the daily, you would have taken that short position at the close of that candle when the CCI breaks below, and you're still be in the trade today with a 2% gain in about 5 days of trade. Previously, there would have been another trade down to the downside. That would have been a stop loss. So again, depending on what time frame you're trading, and on this one, you would have gone short on that candle when it broke below the moving average, and you would have closed it out at the close of that candle. So that was just under a 0.7% gain in 7 days of trade, and another short trade there, and again you close it out, and that would have been a break even on that one. So again, the daily is not showing too much of a gain on the returns. But if you go to the intraday chart, again the way you trade this, you go in the direction of the higher time frame, the daily. So here, for example, you would have taken a couple of small trades there. That would have been a small. Let me just zoom in a bit. So you would have gone short on that candle there, and you closed it out when the CCI breaks into that moving average range at the close of that candle. So very small gain there. Avoid going long. Another short entry there when it broke below on that candle, and you would have closed it out when the CCI broke into that moving average range. So that was a 0.3% gain in 8 hours of trade, and another short entry there, and close it out again when it breaks into that moving average range near the bottom there. That was a nice big trade, a nice long trade there. Short trade on the long side, 1.4% gain in 15 hours of trade. Avoid going long during this. Another short entry there, and you get out of the trade when it breaks into that moving average range there. So another 2% gain, 2.14% gain in 11 hours of trade. And since then, the CCI has been moving to the upside. Avoid going long or short. Remember, we're only going in the direction of the higher time frame. And what this is also showing us here is a bullish divergence. So we've got higher lows on the CCI versus lower lows on the price. And what that indicates is we're going to get a bounce. At the very least, we're going to hit this smaller Fibonacci range up to that Fibonacci before that divergence started. And we expect it to hit, at the minimum, that 23 to the 38% level of that Fibonacci range. That's a minimum retrace. Sometimes it just hits this range and it continues to the downside. Other times it breaks right through. So at the moment, it's on track to hit that 23% at the very least. So for high grade copper on the monthly, this is broken up to the upside. Fresh breakout on the monthly on the CCI. You can see the price is also above the moving average. So bullish momentum on the monthly. On the weekly has been bullish as well, above the moving average of the CCI and the price, although notice there's a bit of a pullback at the moment on the weekly. And on the daily, that pullback is demonstrated by the break below the moving averages. So bearish momentum at the moment. It's a fresh breakout to the downside on the price. It's been bearish for a number of days now on the CCI. And if we go to the intraday charts, again taking short trades only on the intraday, this is the 1 hour chart. More recently, you would have gone short. Probably that would have been a close out there on that close there. And you close it out. At the moment, you're still being in the trade actually, because that CCI hasn't broken into that moving average range. So what that's returned so far is about a 1.8% return in 14 hours of trade. So not a bad little return. Avoid going long during these periods because we're only going short according to the daily. And there would have been a couple of other short trades that could have been taken back here, back there, that would have closed out with a 0.3% gain in 15 hours of trade and so on. Some of these are, break evens, but others are a bit more profitable. So it's just a matter of taking your, and I'll put stop losses generally above the upper range of the CCI, of the price chart. That's where you put your stop losses. So in other words, back here, you could have let this continue to drop, and you could have got into the trade back there, for example, on that candle, and let it go through without breaking above that top layer of the moving averages. So in other words, that would have returned, if you did that trade, you would have got in at the close of that candle, let it run, and that would have returned 1.1% in 23 hours of trade. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching, and see you in next week's video.